When it comes to investing, many people focus heavily on picking the right stocks, but there's a crucial factor that often gets overlooked: investment fees. It's easy to get caught up in the excitement of choosing the next big winner, but if you're not paying attention to the fees associated with your investments, you could be leaving thousands of dollars on the table. Let's break this down. Every investment fund has something called an expense ratio. This is the annual fee that funds charge their investors. It might seem small at first glance, maybe just 1% or even 2%, but over time those fees can really add up and eat into your returns. For example, if you invest $10,000 in a fund with a 1 expense ratio versus one with a 0.11 ratio over 30 years, that seemingly small difference can cost you tens of thousands of dollars. Imagine this. You're comparing two mutual funds. Fund A has an expense ratio of 1.5%, while Fund B is at 0.2%. If both funds return an average of 7% annually after 30 years, you could end up with nearly $100,000 more in Fund B just because you chose a low-cost option. That's the power of compounding returns working in your favor rather than against you due to high fees. So, how do you ensure you're not falling into the high fee trap? Start by reviewing your current investment portfolio. Look at the expense ratios of the funds you're invested in. If you find any that are significantly higher than average, it might be time to consider switching to a lower cost alternative. There are plenty of index funds and ETFs out there with expense ratios under 0.1%, which can provide you with similar exposure to the market without the hefty fees. Another actionable step is to use online tools and resources to compare funds. Websites like Morningstar or even your brokerage platform can help you analyze the fees associated with your investments. Don't hesitate to ask your financial advisor about the fees as well. A good advisor will be transparent about costs and help you find the best options for your financial goals. Remember, keeping your investment costs low is one of the simplest ways to boost your overall returns. It's not just about how much you make, it's also about how much you keep. So, take a moment to reflect on your investment strategy. Are you focusing too much on stock selection and not enough on the fees? I encourage you to share your experiences in the comments. Have you ever switched funds to save on fees? What impact did it have on your investment journey? Let's learn from each other and make smarter investment choices together.